All right, so bad debts. So bad debts are, again, something you can write off. Just know that you need to work through some kind of analysis that they are worthless, right? I'm not going to get this money. And of course, you can't write off something that you didn't previously pick up is also the other key, right? So if you haven't booked the income, you can't write it off as a loss. But if you picked up the income at some point, Billy Bob's going to pay me $10,000 for this tractor, and then Billy Bob, his business falls apart and doesn't pay for the tractor. Well, whenever you're like, Billy Bob's not going to pay me, whatever happened, all this stuff happened and he's just not going to pay me. Then at that point you can write it off, and that's a deduction. So work through your receivables, figure out what you're going to collect, what you're not going to collect, that you truly think it's worthless, and then write it off, and that's a deduction. So asset purchases, this is a big one for a lot of taxpayers, especially if they're capital intensive, is, Ryan, I need to buy some stuff. Cool. So my personal philosophy is I'm not going to tell you to buy a tractor or buy a $70,000 SUV or buy a G-Wagon if you don't need it. Now, if you're like, Ryan, I've always wanted a G-Wagon and my 96 Buick LeSabre has crapped out on me and it's just time for a new ride, I'm going to say, sweet, that sounds like a great time to buy yourself a G-Wagon. You deserve it. Your other car crapped out. Let's get to the G-Wagon. Then we're going to write it off. Or I really wanted this big D10 bulldozer. I just haven't been able to finance it until now, but we need it for my business. And I need it before the first of the year. Sweet, let's take it. But I'm not going to say, hey, Joe, I know you just bought a car last year. How about we buy another car this year and write it off? Why, Ryan? Well, because if you buy a $70,000 car and you're going to write off $20,000 of taxes, you're out $50,000, right? You paid $70,000 to save 20, you're net 50 negative. That doesn't make any sense. But if you need some stuff, let's write it off. So what are the rules? 179, this is one a lot of people are aware of, right? So new and used machinery equipment, computer software purchased off the shelf, and then qualified restaurant property, retail improvements, leasehold improvements. 179 will let you write it off, all of it off, essentially, in the year you buy it if you elect to. And that's up to $1 million, right? So if you're like, sweet, I bought a couple $100,000 of stuff, I haven't bought more than $2.6 million of stuff, I'm gonna have a profit for the year, then awesome, 179 may be an option for you. Or you're like, Ryan, things are looking like they're gonna end well, and I do need a new bulldozer or a new tractor or a new, whatever, cubes for the office or whatever that may be. Awesome, so let's look at what you need to buy and try to get it purchased for the year. Note, a 179 deduction cannot create a loss. So you can only use this if you're gonna make money. Now you can use it up to zero, right? Up to bringing everything down to zero. So you're like, I'm gonna make, like right now I have $10,000 profit. Well, cool, let's buy something for $10,000 or write off up to $10,000 and get you down to zero. Now, the other option is this one, bonus depreciation. Bonus depreciation is currently 100%. All right, you just told me I could write everything off on 179. Yep. Or you can use this one. And this one can take you to a loss. So maybe this may be the option for now, as long as it's 100%. This is going to be tangible property with a recovery period of 20 years or fewer, and I'll show that to you on the next slide. But it's the items under 20 years, under makers. And if you don't know what makers is, it's an abbreviation for someone's tax thing. But ask your CPA or accountant, or feel free to shoot me an email and go, Ryan, what was under that 20-year thing? Or you can just look at the next slide. And then consider making what's called a de minimis election, so that when you buy things under $2,500 down here, hopefully you can see that down there, you can just write them off. You're like, Ryan, I bought a new computer, it's only $1,750. Sweet, don't capitalize it. Let's write it off. It's just a small purchase. Or hey, we bought a Husqvarna tractor for some of our rental properties. It was only $1,800. Sweet, let's write it off. Don't worry about depreciating it. But you have to make the de minimis election. So here's kind of what falls in the 20-year property, right? So you want to stay above this line, right? This 20-year line. So tractors, talk about that, automobiles and trucks, office furniture. If you have barges or tugs or vessels, there you go. Some land leasehold improvements, farm buildings. There's a lot of stuff, and these is not an all-inclusive list, but just some ideas of what may fit that bill. Business losses. So they also, the last time around, they put this fun rule about business losses in there. So if you have business losses in excess of $260,000, you may not be able to deduct all of them this year. And you may not be able to deduct them all next year because you're limited to 80% of income. So just know if you have losses, you're expecting losses, this is something you probably want to look at. I'm not going to go into a whole bunch of details, but that's out there. S corporations, I want to touch on this section right here real quick. So S corporations. So a lot of people elect to create an S corporation because they want to save self-employment taxes, which is awesome, right? So if my business makes $200,000 and I pay myself $100, I only pay employment taxes on the $100 I make. The $100 difference is just business income. It's not subject to self-employment taxes. But the IRS knows the game, right? They know that people go to S corps to save employment taxes. So what they look at is they go, okay, wait, so you're the only person in this business and you made $200,000, but you only paid yourself $100. So how do you justify not paying yourself the full $200? You're the only person in this business. And so they know that you're trying to game the system by pushing your wages down to save employment taxes. So you want to make sure that if you're an S corporation, you have reasonable compensation. This probably needs to be revisited each year. Just say, hey, am I still good at the 100? Do I think I need to be up closer to 150 or what it is? So that you don't get caught by the IRS trying to push your wages down. And just note that your wages also impact QBI. So the more you pay yourself, the less qualified business income deduction rate you may get. So there's a kind of catch-22 there, along with other things, because you got to measure self-employment taxes. Note that if you have losses in an S corp, you can only deduct them up to your investment. So it's very important to know your basis. You'll want to talk to your CPA or accountant about what your basis is. But if you have $10,000 of basis, yes, and you have a $50,000 loss, you can only deduct $10,000. That $40,000 extra gets captured and carried over. You can increase your basis by loaning your company money or making a capital contribution, but just know you can't take losses beyond what your basis is. So we talked about retirement planning. Same thing holds true for businesses. If you don't have a retirement plan set up, try to get one set up. It'll help. No healthcare reform rules. If you have over 50 employees, you're supposed to be providing health insurance. So just keep that in mind. If you started a new business, you can deduct some startup expenses in the year you start the business. And you can hire your child, in case you have some kids that you want to put to work. You can hire your child. Now the key is they need to do legitimate work, not like, they came in and crawled on the floor and drooled everywhere, and then I had to clean it up, and I paid them $12,000. No, it's like I follow a blog. The guy's it's the White Coat Investor, and he pays all of his children. He's got like 3 or 4 kids. What is he paying for? He pays them for modeling services. What do you mean paying them for modeling services? Well, he writes a blog, he writes books, and guess what pictures are in all of his blogs and his books on his website? It's all his kids. So every time he writes a blog post, there's pictures of his family in there, talking about a trip they took or wherever it may be, and he's using them as part of his business, as part of his marketing material and his blogging material. You can do that. You own a shop and taking pictures of your kids makes sense. You want to pay them for modeling? Great. That's fine, just to be justifiable and reasonable. You can also have them help you clean or vacuum or whatever. You just need to be able to prove it. It needs to make sense so that if IRS comes knocking, you can go, no, this is what they do. Note that, up to $12,000 is a standard deduction. You can pay them $12,000, they're going to take the standard deduction, they pay 0 taxes. You got $12,000 out of your business, you get the write-off because it's expense, and they don't pay any taxes because you paid them under $12,000. Or you pay them $18,000. They have earned income, so you take a standard deduction. They have earned income, so you contribute an IRA contribution for them. Right? So now they made an IRA contribution and they have standard deduction. They still owe no taxes. Right? So you get that deduction, and you get your kids some money, and you maybe start an IRA for them early. So that's out there, but you definitely want to talk through that with your tax professional. Make sure you get the right plan in place. Everything's documented well. Credits. I'm not going to cover all these, but there are credits that are out there. The slide is in there. If you want to look at them, there's lots of credits available, but this is a handful of them that you may be pertinent to you. All right, so the infrastructure bill that Biden should sign, I would imagine, in the next couple days. Employer retention credit, I mentioned that one. It's going to end on September 30th. So Brian, that's already passed, yep. So Q1 through Q3 for that 70% thing we talked about earlier is out there. Crypto asset reporting. They changed the name of broker in the tax law to now include anyone who, for consideration, so payment, effectuates or participates in the transfer of digital assets on behalf of another person. Now, transfer of digital assets on behalf of another person is not a very clear definition. So people in the crypto community are like up in arms. Who in the world fits that definition? Is it somebody that's mining virtual currency? Is it like just the exchanges, or what is it? So to be determined on how many people that's going to impact, but just know, right now in crypto, there is no reporting. You trade Bitcoin or whatever it is, nobody's going to send you a 1099. That's it. You got to track it yourself. This will create that mechanism, what we're all used to in the stock world, getting a 1099 report that tells me what I bought. This third one, I put it in there just because it was part of it. It's not important for most of us, but just know they changed the definition of how the extension works for federally declared disasters. All right, the new tax law that's coming out. So, doing okay. Increase in the corporate income tax rate. These are all proposed, right? It could change while I'm talking. It could have changed yesterday after I prepared this. It may change tomorrow. This is just kind of the stuff that's in there. I just want you to be aware of what may come. And this probably doesn't include everything either. They're talking about increasing the corporate tax rate from 21 to 28, and then doing a minimum tax of 15%. That 15% falls in line with, I don't know if you have heard, but there's a global tax rate they're discussing, like countries across the world, and that 15% mirrors that global tax rate they're talking about implementing. So that it doesn't matter where you go, you don't go to Ireland to skirt corporate taxes. Everybody's going to charge you at least 15%. They're talking about increasing the top marginal rate back to the 39.6. When you factor in the net investment income tax, it may go to 43. So if you're in that top tax bracket, you may be looking for a bump. Okay, they're talking about changing long-term capital gains. I mentioned this earlier. If you make more than $1 million, no longer will you be able to take 0, 15, or 20% capital gains tax. You're going to have to pay whatever your rate is, which may be 43%. Right? So the goal was they want to hit these people making more than $1 million, and they're going to hit them at capital gains as one of their ways to get money. 1031 exchange is when you essentially say, I'm going to sell a piece of real estate, I'm going to capture the gain, I'm going to use that gain to buy another piece of real estate, and then you never get taxed on the gain. They're talking about limiting that to $500,000. Currently, there is no limit. So if you're involved in 1031 exchanges, if you know what it is, feel free to ask me. I don't want to get in the weeds too far. They're talking about getting rid of that SALT deduction I talked about earlier. So that $10,000 limit, they're talking about getting rid of it. We'll see. That one's kind of a hot button issue. They're talking about the elimination of step-up invasives for inherited assets. So what does that mean, Ryan? Well, that means like my grandma passed away a few months ago, and when she bought her house back in the 60s, she bought it for $50,000. When she passed away, it was worth $300,000. There's a $250,000 gain. Right now, the heirs get a basis of $300,000. It gets stepped up to whatever it's worth at the time of death. Which means when they sold her house and there was a $250,000 gain, they didn't pay any taxes because their basis was $300,000. They're talking about getting rid of that. So in my case, my parents and their brothers and sisters would have had to pay taxes on that $250,000 difference because they would get away, they would eliminate that step up. That's a big one if it goes through. For those of you that gift regularly or know people that gift, they're talking about dropping that from $15,000 per individual to $10,000. Just keep that in mind. It's, again, hasn't passed, it's just stuff that's in the works. Estate taxes are talking about doing a graduated rate system based on the value. So if you're under that $3.5 million estate value, it's 0, but as soon as you cross that $3.5 million threshold, it's 45%, all the way up to 65% if you have over $1 billion estate value. That's a lot. All right. I got a few minutes. I'm going to try not to talk about this all of this topic. Anybody invested in crypto in here? 1, 2? Okay. Anybody not really sure what crypto is? Yeah, okay. All right, so cool. We'll do a quick primer. All right. So cryptocurrency is, think of it as digital money, right? It's digital currency. So it's like using your debit card, right? You never see the cash. It just happens. It goes from one bank to the other bank. You never do anything with it. Crypto is kind of the same way, right? Except that it's not US dollars. It's whatever you are using. How do you create it, Ryan? Well, it's created via mining. So Bitcoin and Ethereum, they solve these complex puzzles. And when you solve the puzzles, it creates Bitcoin. And now there's another Bitcoin in existence that you now have. And you can spend or sell or trade. You can create it via staking. So you put some money up to validate transactions. And part of that process creates new cryptocurrency. Or the developer of the cryptocurrency says, you know what, we're going to start this cryptocurrency, and upon creation, there's going to be 1 million of these available. And then from there, there's ever 1 million available, and people buy them and sell them and trade them at whatever denomination they want, at whatever value they see fit. Okay, cool. That's interesting. What's the point? Okay, well it's on blockchain. So blockchain is, think of it like a bank account ledger. That's right. So when I swipe my card and my money transfers from here to there, some bank is tracking the transaction, right? Citibank or Chase or whatever. This blockchain is public. There is no company managing it. So when I start to operate with these currencies up here, it's tracked in the blockchain. And it's out there forever, and it can't be changed. So it provides an immutable ledger of what happens. So I send you $100 in Bitcoin, now it moves from my wallet to your wallet, and now people know, if they knew who you were, they would know that you have my $100 now, or your $100, and you can send it to her, and now she has $100, and it tracks that progression. And it puts it in what's called a blockchain. When you mine Bitcoin, what it does is it takes all those transactions and it puts them into a block, and it verifies that everything is correct, and then once it's confirmed, Bitcoin's created. Okay, Ryan, it's still really over my head. Okay, just bear with me. The whole point of me making you aware of this is kind of this point right here. 80% of the countries in the world are in some part of the process of coming up with their own central bank digital currency. So think of a digital dollar. China already has one. It's a digital yen. The Bahamas already have one. It's called the sand dollar, right? Countries are creating their own digital currency. So I'm making you aware of this to let you know that it is coming for everyone, right? It is a train we are all going to get on, whether you like it or not, and it'll become the norm. Now, which one of these wins out or becomes the kind of the universal currency, or maybe several of them do, maybe they all serve different purposes, I don't know, to be determined. But when you have a majority of the world looking at something related to this space, it's coming. El Salvador is the first country ever to accept Bitcoin as legal tender, which means in Bitcoin you can use $1 to buy pizza, or you can use Bitcoin to buy pizza. It's up to you. They gave all their citizens $30 of Bitcoin to start with on what's called a Shiba wallet. Now they all have their own wallet. They can buy, sell, trade. They have Bitcoin ATMs, just like they have dollar ATMs. So in El Salvador, you can run your life on Bitcoin. They are not the only one that is in this, they are the only one that has done it. They are not the only one that's in the process of doing it. There are more countries that are working on it. So cryptocurrency, you can buy it, sell it, trade it, send it, leverage it, lend it, borrow it. Anything you can do with dollars, you can do with cryptocurrency. Warren, what does the IRS say? Well, the IRS doesn't really have any clear rules out, just like the AICPA doesn't have any clear rules out, just like all the reporting and regulatory boards. They have no rules and regulations out. The only thing we know thus far is the IRS views crypto as property. What does that mean? They treat it like stock, right? So if you buy Bitcoin and you sell it tomorrow, it's a short-term capital gain or loss. If you buy Bitcoin today and you sell it a year from now, it's a long-term capital gain or loss based on the price of Bitcoin and when you sell it. The catch is any transaction is a capital gain. So in that essence, it's not treated like currency. I go to Pizza Hut and buy a pizza for $20. When I swipe my Bitcoin card and buy Pizza Hut pizza, I just had a capital gain transaction. Because if that Bitcoin that I bought my $20 pizza with was $18 when I bought it, I have a $2 capital gain. So that's where it gets a little nuanced, is they treat every transaction as a capital gain or loss. Now, except for moving money within yourself. So if I have a wallet over here and a wallet over here and I send money from here to here, that's not taxable. But if I buy a service from you, or I buy a good from you, or I whatever, that is all taxable. The other thing to keep in mind is currently, there is no reporting. So all this stuff happens out there, and it can be tracked and found. So it's not a good way to launder money. Why? Because it's on the ledger, it's on the blockchain, and it can't be changed. So as soon as they figure out who you are, they can see everything you did for forever, because it's out there permanently. So it's like, well, people are trying to be shady. Well, they can be shady until they're found, and then the government's going to know everything they did, because it's all out there, and it can't be changed, it can't be hidden. You can't go back and reverse the transaction. It's out there permanently. But with no reporting comes more responsibility for you, right? Or for me, for those of us that own it. I have to track my transactions, or I have to utilize a service, which there are, where I can hook my accounts up and it'll suck all the data in and tell me all the stuff that I did. But for those of us that do it kind of daily, there's a lot of transactions. There's a lot of stuff going on for me to be responsible for. So if you get in this space, just know you need to keep good records. Or you need to be prepared on the front end to have a service that's going to help you keep good records. And do know the IRS is aware. In fact, last year it was the first question after your name and address on the tax return was, did you buy, sell, trade any cryptocurrency? Like the first check the box on the tax return for everybody in the United States was, did you buy, sell, trade cryptocurrency? So they are aware and they want you to pay taxes on it, and they know people are not paying taxes on it, and they have a special task force that is coming after people who are not doing the right thing, so you need to report it. Decentralized finance, I want to mention that. So decentralized finance is a component of the blockchain cryptocurrency world, which essentially is all the services of traditional finance minus the bankers. So anything and everything you can think of doing in today's world with bankers, you can do in DeFi minus the bankers. So how do you do that? Smart contracts. So what it says is, I agree to give you $10,000, you agree to pay me 7% interest. If you don't, I get some kind of collateral that you put up. That is written into a contract that can't be changed because it's on blockchain, and it does its transaction. If you don't do your end of the bargain, I get whatever you put up as collateral. If you do your end of the bargain, you pay me my 6% until the term's up, the contract is now completed, and we move on with our lives. There was no banker. You and I agreed, it was put in a contract, it operated appropriately, done. So you're like, okay, now I don't gotta pay bankers, I don't gotta pay for branches, I don't gotta pay for, I'm sorry if there's bankers in the room. But you can do all of this without bankers, right? Without traditional finance. That's where this is going. So, and I mean everything. There are companies that will give you mortgages. You can borrow crypto or fiat dollars. So fiat is like the US dollar. You can lend it. You can deposit your money and receive interest on it. And there's various forms of how that process works. When I found this item right here is what made me realize that this is not going anywhere. So think of all the people that come to the United States who send money back to their family across the world. I come in from the Philippines, I get a job, I want to send money back to the Philippines to support my family. Okay, what does that process look like right now? I go to my local bank, I go to Western Union, I want to send $100 across the world, and what happens? Okay, well, they charge you $10, and it takes a week to get from you to them after going through 3 or 4 banks, and they each charge fees. So the $100 you sent ends up where it's supposed to be a week from now, but instead of it being $100, it's $75. Okay, how does cryptocurrency fix that? I log in my phone, I buy Stellar Lumen, or I buy Bitcoin. And you in the Philippines, you get your phone, and you tell me what your public address is. And I go, okay, hang on, I'm gonna send you this $100, click, and about, I don't know, a minute later, you got the money, and nobody else touched it, and it went from me to you in the Philippines, and cost you about, I don't know, 35 cents to get from there to here. Okay, what happens when it gets there? When it gets there, you just change it from whatever I sent you back to Philippine pesos, and you go to, it's now in your account. Done, right? So when El Salvador took Bitcoin as legal tender, they said it was going to cost Western Union like $100 million a year. Because people sending money to and from El Salvador is no longer an issue. They can send Bitcoin from somebody in the US to El Salvador or vice versa in a matter of 10 minutes, and it'll cost $1. In fact, I read an article the other day, somebody moved some ungodly amount of money, like $500 million of Bitcoin from one account to the other. $500 million between 2 accounts, and it cost them $1.50. Right? When that is the world you're talking about, it just makes so much sense. It's quick, it's cheap, there's no middleman, there's no infrastructure. That's what's coming. And then you have, I don't know if you have seen the news, but now you have like mayors that are going to take their currency, their payment, their payroll, wages in Bitcoin. New York, he's taking, I think, his first paycheck or first 3 paychecks. Miami mayor, he's a real big Bitcoin advocate. I think he's taking his whole salary in Bitcoin. A couple other cities, mayors advocating for it. Miami has their own Miami coin, in case you weren't aware. New York is creating their own New York coin. Now, they're not owned and operated by the cities, but they are created as a benefit to the city by a third party. So like Miami, theirs released earlier this year, and they've already made $21 million on people transacting in Miami coin. So the fees people charge are kicked back to the city as a benefit to the citizens. So Miami is actually getting ready, they're going to pay a dividend to all of their citizens in Bitcoin because they've made so much money off of their Miami coin. Pretty cool. All right, here is some of the risks. So I do want to make you aware of the risk. If you decide to get in this space, it's kind of cumbersome unless you go through something like Coinbase, which is just like you log into any other account, you buy it with cash. That's easy. If you try to get into much else beside that, it gets a little complicated and hard to follow and understand. Just know, if you step outside of somewhere like Coinbase, which is a centralized exchange, so Coinbase, it's a username and password like any other account you would have. They hold your assets for you. Great, you lose your username and password, you call Coinbase. They help you out. As soon as you step outside of that world, and you do anything else that's not a centralized exchange, you are responsible for the ownership of your assets. What does that mean, Ryan? It means instead of a bank holding your money, you hold your money. Oh, that sounds pretty cool. Okay, let me tell you what happens. You get what's called private keys. Generally, it's a set of 12 words. You get told these 12 words, that's one time, essentially one time. You can find it assuming your phone doesn't crash, but you get them told one time, and it's your job to record them somewhere. I would not recommend your phone or somewhere on the computer because if you get hacked, somebody's going to find your keys and so whatever. Probably a piece of paper or something and you put it in a safe. Maybe 3 safes. Just because of what I'm going to tell you here in a second. These private keys control your money. You got the keys, you got the money. If you give your keys to somebody else, they have your money. If you lose your keys, your money is gone. If I'm not at Coinbase, I don't have a 1-800 number to call, and I'm outside of a centralized exchange, there is no 1-800 number to call. It is, I didn't write down my private keys, I dropped my phone in the lake, now what? Sorry, whatever you had, it's out there, your money is still out there. It's on the blockchain, I told you it's not going anywhere. Your $10,000 is still there and it's still yours, you just can't get to it. Why? Because you don't have the keys anymore. You left the house, you didn't bring your keys, now you're locked out, except there's no locksmith. You can't get back into your own house. So just keep that in mind, and that's a very important one. If you go into this world, you want to have like I said, a piece of paper. They make these steel template things, you can put them in, and you want to put them 2 or 3 places that you know they are so that you don't lose your money, right? You don't want to lose your money. The other thing is it's highly volatile, except for stable coins. So stable coins are pegged to a fiat currency generally, so like a US dollar. So they have USDC, US dollar, I don't know what the C stands for. That consistently stays $1. Why? Because it's really easy to transact in something that's worth the same thing all the time. It's worth $1. Plus or minus 0.05% or whatever. They don't change. Everything else is super volatile. Good to the good and to the bad. That means you can make a lot, I'm not a financial advisor, you can make a lot of money really quick, you can lose a lot of money really quick, right? If I invest in something like SafeMoon, which is one of the ones I'm in, over a course of a week, I may make 200%, right? So I may invest $1,000, I make $2,000, I end up with $2,000, $2,500, $3,000. It looks great while you're watching it go up. You're like, oh my God, look at this thing, you're killing it. And then 3 days later, it's like I dropped 50%. It's like, right? So that's the world it's in, right? Bitcoin will be up 5% a day or 10% a day, down 5% tomorrow. Like it just swings a lot. So there's a lot of risk, but there's also potentially a lot of reward. And then there is still no regulatory framework. The SEC thinks they're in charge. The CFTC, so Commodity Futures Trading Commission, thinks they're in charge. I'm sure Congress thinks they're in charge. I'm sure the IRS thinks they're in charge. Nobody knows. They're all trying to figure it out. So it's still kind of the wild, wild west. So just know that's out there. It's risky. We've got 3 minutes before we get to the whole hour. All right, I'm going to briefly tell you about us. I told you I'd save it to the very end. So we were founded in 1973. We've got 3 offices, Morgantown, Charleston, Parkersburg. I'm in the Morgantown office, so I'm just up the road. 80 plus professionals, we have 17-ish partners, with a high majority of female partners, and then we're a top 300 firm in the country from 2018 to present. This is some of the stuff we do. So if you're like, well, what exactly do you guys do? We do a lot. So we definitely do tax planning preparation, which includes crypto. That's what I talked about. I do that. We also do client accounting advisory service. What does that mean? That means bookkeeping, payroll taxes, all that kind of stuff. Guess what? Including crypto. That's me. Audit review compilation services. That's me too. In fact, we have a crypto audit coming up in January. What does that mean, Ryan? It means I'm going to be auditing a company whose sole purpose is to trade cryptocurrency. They have investors, they take that money, they buy, sell, trade cryptocurrency. That's who we will be auditing. It's pretty cool. We also do human resources, valuation services, estate planning and trust, outsourced CFO, succession and retirement planning, kind of the stuff that you would anticipate a CPA firm would do. So that's me, of course. And then these are our 3 offices. There's my phone number. Again, like I said, there's 20 more slides after this. That's like the tax tables and different things. If you want to read more, it's in there. I'm sure you would love it. I'm sure it's super exciting reading. But this is me. If you need me, like, I'll answer any questions. If you want to talk crypto, just be prepared to talk a lot because I love it. I'll talk your ear off. I'll tell you anything and everything you want to know. At least that I know. I don't know it all because it's still a developing space. But if you have tax questions, just anything, I'm here as a resource. So just holler at me. Glad to help wherever I can. So we like 1 minute. Does anyone have a question? If not, I'll hang out. You guys can ask questions.
Yeah. Great job, by the way. I think that was fantastic.
Thanks.
I don't want to go down this rabbit hole, but from a capital gains standpoint,
yeah.
how are NFTs treated?
So NFTs are similar. So for those of you who don't know, what's an NFT? NFT stands for non-fungible token. So think of like a digital. This is a really simplification. Think of like a signed to Mickey Mantle baseball card on the blockchain, right? So it's like, and that is a super simplification. It is like a picture, or it could be a piece of music. It could be a sports clip that's condensed into a short little slam dunk clip or something, and you can buy it and then you own it. So I own the clip of Michael Jordan's, whatever, most iconic slam dunk ever, and since it's on the blockchain, I can prove that it's mine, and nobody else can prove that. Okay, so what happens with taxes? It's very similar to the rest of crypto, right? When I buy it, that's my basis. If I buy it, and then my Michael Jordan shot goes up to $1 million, I bought it for $1,000, it's a $900,000 capital gain. Depending on how long I held the Michael Jordan slam dunk shot, it's either short term or long term. So it's similar to the rest of crypto. And people have made a lot of money on NFTs. And some of them are really dumb. Like, I'm going to buy a JPEG picture of a rock, and I'm going to pay $700,000 for it. It's like, why? It's a picture of a rock. I probably can find it on my computer under the picture files. But people are doing it. They think it's a way to make some money and whatever. The real use case for NFTs is on like my ID, so like my driver's license, right? So if I can put my driver's license as an NFT, and then I can just access it on my phone, and then I can prove that it's me because nobody else can have access to it. It's on the blockchain. It's got all my information on it. I just got to be like, here's my ID. I no longer have to carry it around. You can pull it up. I'll give you the ID, the thing, and you'll find it. Or deeds for houses. So instead of us having all these paper records and files, we'll just put ownership on the blockchain. Now you own your house. If I want to know who owns the house, I just go find it. It's out there. It's permanent. And when you transfer it from you to her, it moves on the blockchain, and now she's got it. And it's out there for forever on the blockchain. Nobody can change it. Nobody can, So that's where NFTs really will shine as they get adopted. But for right now, people are using this, buy a picture of a rock.
Other questions? Well, Ryan, we want to certainly thank you for being here this morning and very interesting presentation. And we have a small token of appreciation.
Thank you so much.
So thank you.
Yeah.
A couple of closing comments. We do have our annual dinner. Hopefully, fingers crossed, we're going to pull that off on Tuesday, December the 12th at the Bridgeport Conference Center. And then we'll be planning and looking ahead to next year, not only the Business at Breakfast series, our Business After Hours. Our first one will be March the 1st. It will be 2 years since we've had an After Hours. So hopefully March 1st we'll be at Mardi Gras at the airport, and we'll kick things off right for next year. So thank you all for being here. Thank you for your continued support of the Chamber. We look forward to seeing you, if not at the annual dinner, next year. Thank you.